Just in the interest of time, I'm just gonna proceed so that we can at least get through everything, or at least most of the stuff. The theory stuff I'm not gonna go through with you. All right, so let's proceed with question 4. With question 4. So what is going on with question 4? Question 4. Let's start by reading the top of the question, then we'll go to the back. This was much like the question that you got in your test too. That last question that was showing people's other things. All right. So I'm actually happy that they had this question, so at least we could go over it. And then by the end of this week, because I would have gone through, I was telling the guys who came earlier, I would have gone through question, I think it's 5.6 in your textbook, which is much like that question as well. And then also I would have done the revision for your test too. So I'll say by Saturday, just go on to my YouTube channel and then you will have that. You will have the revision for your test too. And you'll also then have that exercise also completed. So you should be 100% if you do see this question again. All right, anyway, let's get into this. It says, ACBP Traders is a business that makes use of a manual bookkeeping system. It is a registered VAT vendor and deals only with other registered VAT vendors. A standard VAT rate of 14% applies. As the bookkeeper, you are in the process of preparing the basic general ledger reconciliation statement of Glacier Traders as at 31 May 2016. Calculate the balances. Question 4.1 to question 4.14 as they will appear in the corrected trial balance. Start with the balances as given in the incorrect trial balance and then make the required adjustments needed per the list of errors and omissions given below. In your answer book, next to the number, show the workings where applicable and the final answer. Therefore, the balance pre the correct trial balance, okay, so in other words, add minus from the incorrect trial balance to show how you got to the correct balance. That's what they're saying. You need not provide the missing information denoted. Doesn't mean you actually need to actually calculate that amount. What you do need to calculate is where you see question 4.1, question 4.2. Does that make sense? Saves you time. So that saves you time. So when it comes to question 4.1, can you see there? Oh, wait. First, let's go through the errors before we do anything. Okay. So what we want to do is we then go and we see the following. In order to get to the correct balances. So a debtor whose account was previously written off as irrecoverable unexpectedly paid the amount of 3,078 rand. The following double entry was passed. Okay, so they debited the bank, okay, which makes sense because we're receiving money, and then they credited discount received. Now here they said these are errors and omissions. So what would have happened here? What's wrong with this transaction? Us receiving money in the bank, it makes sense, right? Because we've been paid. So that's fine. But should we be crediting discount received? Which account should we be crediting? Not the bank. Bank is debiting because we're receiving money. So we can't credit because that means we're losing money. So if you flip back to the trial balance, you'll see an account there called credit losses recovered. You see, just to give you some context again, remember, whenever we write off a debtor, what are we saying? We're saying she owed us, she couldn't pay us. We're then saying, okay, let's just accept that we're not going to get our money. Now, out of the goodness of her heart, she comes back and says, you know what, I owed you guys, I want to pay what was due. We had already written off in the books that she's never paying us back. We closed her account. Does that make sense? So when she comes and gives us that 3,078 rand, what would then happen is, yes, our bank account is going to increase, so we debit the bank, that's fine. But then we credit losses recovered. Does that make sense? So credit losses say someone we thought wouldn't pay us has come and pay. That's what that account is like. So what we then need to do is we need to debit discount received, okay? And then we need to credit losses recovered. Does that make sense? Okay, right. So that's what needs to happen there. So when you're running through this, what I would suggest, let me see, do they give you? Okay, sorry, just give me a second here. Okay, perfect. All right, it's already recording. Just want to share the screen. Okay, let's just do that again. Okay, perfect. We are back in business. All right, cool. Huh? What is that about now? Sorry, just give me a second. Screen was just acting funny. Okay. Now? All right, so let me just scroll back this side. Just want to see something. I want to see if they gave you in the answer booklet a trial balance to rectify. Or did they just give you these open spaces? Okay, they just gave you these open spaces. Okay, cool. Right, so, it's a bit tricky now because it's now a question of, do we go and adjust the discount received account? So what I would suggest, right? This is what I would suggest. Since in your answer booklet, they didn't give you a trial balance reconciliation statement like they did in the question paper. If you're looking at the question paper, can you see? They gave you this. So what I would do, like how I've done here, is I'll go to discount received, right? I would then debit that by 3,078. Also on question 4, we just read the first error. We're doing the trial balance reconciliation statement, just for you to be general. Okay. So there what had happened is a debtor who we wrote off as irrecoverable, in other words, credit loss, we wrote them off, not going to receive it, came back and gave us money. So they, out of the goodness of their heart, they say, no, I want to settle what I owed you guys. Okay? So we don't record that in debtor's control because we had already written that off. Does that make sense? So the accounts that are affected when somebody comes back is bank, because we're receiving money, and then credit losses recovered. So here what they did is they credited discount received. So we need to reduce the discount received amount by discount received account by 3,700. Sorry, 3,078. So we're going to debit that account. Okay, going to debit discount we received, right? Because that's an income account. when we get a discount as the business, that's discount received, right? So when we get a discount, we treat it like as if we just received money. Okay? So that's why we're debiting, okay, to reduce it. Then, what we're then going to do is we're going to then credit losses recovered, because that is also an income account. Okay? So we're crediting that. Okay? And then you're done with that right there. So what I do is, to answer this, I first fill out this stuff here, according to the adjustments. And then I would then begin to fill in the answers over here. Does that make sense? Just to make your life easy. Okay. So that's how we're going to handle things here. Then, after that, the next transaction, the second one, it says an amount of 1,000 excluding that for advertising was inadvertently debited to discount received. Input VAT was claimed correctly. When you see that, input VAT was claimed correctly, or that was correctly entered, you know that I can ignore that. I don't need to worry about that. It's been done already. The error is in the accounts that were debited or credited. So here they said, we debited discount received. So in order to rectify that, we then need to say, okay, to erase that, in other words, take that amount out of discount received, what do we need to do? Sorry. We need to credit discount received, because we debited initially. To remove that entry, we need to credit it. So we credit discount received, flip back, we go to our discount received, we look for the credit section, we put in that 1,000 there. Okay? We've dealt with that first half. Now, where was this amount supposed to go? It was supposed to go to advertising. So then we go to advertising, and we say, okay, we know this expense was supposed to go to advertising. Where the hell is advertising? Okay, there we go. And then we're supposed to debit by 1,000 in advertising. Okay, because we know advertising is an expense, and it's increasing. And then you've dealt with that transaction. And now move on to the next one. So the third one, they're saying stationery column in the petty cash journal was overcast by 900. Remember, overcast means it was more than what it should be. Okay? And they're saying the stationery column. So they're saying that amount, the total, was more than what it should be. Okay? Then you say, and post it as such. So in other words, the error is now in your stationery. Because what they're telling you is the stationery account is 900 Rand more than what it should be. So how do we reduce the stationery account? We know stationery and postage is an expense, right? So how do we reduce it? We have to credit by 900 Rand. Okay? And then you've done your job. Okay? And then you've done your job. Okay? And remember here, I know there's a temptation to also adjust the petty cash. Remember they said the column. So in other words, the bottom amount that we're posting is the one that is more than 900. So they didn't say that there was an error in the petty cash. So we can leave the petty cash alone. Okay, make sense? Okay, happiness. Right, then we move on to the next. It says an amount of 5,880 was incorrectly claimed as VAT input in respect to property assessment rates. Remember, property assessment rates, we don't claim VAT on those. We don't claim VAT on those. I think those are exempt, if I'm not mistaken. Yes, they're exempt. But we know that for the rest of the electricity bill, we can claim VAT on those. Water and electricity we can claim. So here it says, this was incorrect as VAT may not be claimed on assessment rates. Okay, thank you for reminding us. But they did not need to tell you that, by the way. And the 5,880 should have been expensed to rates and taxes. Saying that we can't claim VAT on it, it means that we have to absorb the full cost. Does that make sense? So this, they're telling you it should be in rates and taxes. So what do we need to do? Can you see with your trial balance reconciliation statement, you don't have an input VAT and an output VAT. Sometimes you do, but in this case you don't. They've just given you a VAT control. So you then should know, when I have input VAT, I know that I need to debit. When I have output VAT, I know I need to credit, because input VAT is a current asset. Output VAT is a current liability. By now you guys should know this off the top of your head. So now, if they're telling us we accidentally claimed input VAT for 5,880, right? That means, what should we do? Should we debit or credit the VAT control account? Because what we're basically saying is we need to reverse the input VAT that we have by doing a output VAT entry. So what should we do? Credit, right? 100%. Okay, because we know whenever we have output VAT, we credit because it's a liability. So we're crediting the VAT control by 5,880. We've dealt with that. Now we need to go to the rates and taxes. Okay? And we know rates and taxes is an expense, right? So what we need to do there is we now need to increase that account. In order to do that, what do we do? Debit or credit? We debit by 5,880. Okay? Done. So can you see how what I was saying is earlier when we spoke a little bit about this, is that when it comes to the trial balance reconciliation statement, if your debt click is not in order and you can't interpret what is going on, it's going to be havoc for you. Okay? Now, again, since we never really did one, all right, it may have been a bit challenging for most of you guys, but at least now you're slowly starting to catch on. First things first, you need to identify which accounts are affected by this error or omission. Then you need to say, okay, so what should I do? Should I debit or credit here? etc, etc. And then you'll be fine. Okay. Then, the fifth one, it says trading inventory column in the creditor's allowance journal, I love this one, was undercast. Remember, undercast means that it's less than what it should be, okay, by 4,400 and posted as such. Okay. So what this tells us is that what must happen to the trading inventory account? It needs to increase by 4,400. Remember, undercast, it was less than what it should be. Overcast, more than what it should be. Okay. And now, before we go there, before we can say the trading inventory must increase or decrease, we have to ask ourselves, what is the creditor's allowance journal all about? When we're returning goods, right? Or getting a rebate and stuff like that. So if the trading inventory was undercast, in the journal where we're returning goods, should the trading inventory actually be increasing or decreasing? This is why I love this question. Because it was not only testing whether you understand what undercast and overcast is, it was also testing how well do you know your journals. See, so if the creditor's allowance journal is whenever we're receiving, or whenever we're giving stuff back to the supplier or getting a rebate from them, in other words, reducing what we owe them, that means that this trading inventory, this amount, it means that we should actually be decreasing trading inventory. Does that make sense? Okay? That means we should be decreasing trading inventory. Because what we're saying is, we either gave that trading inventory to the supplier, or they gave us a rebate on trading inventory, or they had overcharged us on trading inventory. Does that make sense? So either way, this 4,400 is actually reducing our trading inventory. So then we say, okay, to reduce trading inventory, now your debt click is coming into play. Are we debiting or crediting? Or crediting, okay? So it requires a lot of thinking, to be honest with you. Okay? It does require quite a bit of thinking. So we're crediting there, trading inventory 4,400. And then we can move on to the next one. Number 6, almost done. An amount of 620 was posted. An amount of 620 was posted to the credit side of trading inventory account. However, this entry was done with a duplicate credit note, which should have resulted in a debit to the trading inventory account. Okay. The cost of sales account was correctly credited. Okay. So then, what must happen here? And she was done from a duplicate credit note. So here, they tell, hey, this question was so good. Not even a debit or credit note. So whenever we have a credit note, what must happen? What is a credit note? Let's start there. Before we get into this, what is a credit note? What document do we get whenever someone returns goods to us? I just gave you the answer to the question I asked. You get it? You get a credit note, okay? It would be a duplicate credit note if a customer is returning goods to us. Why? Because remember, the supplier always keeps the duplicate. If it's an original credit note, it means that we're the ones who returned goods or asked for a rebate or was overcharged. Does it make sense? So here they told us this was a duplicate credit note. So someone was returning goods was returning goods to us. Okay. So what is then happening here? They said 620 was posted to the credit side of trading inventory. Credit side of trading inventory. However, the entry was done from a duplicate credit note, which should have resulted in the debit of trading inventory. Why should it result in a debit of trading inventory? Since someone is returning goods to us, it means that we have more trading inventory. Does that make sense? But what did we do? We credited trading inventory. In other words, we said we have less trading inventory. But in actuality, we now have more. So can you see now, we need to remove that 620, right? That we credited. How do we do that? Debit 620, right? But then we also should have initially debited 620, right? So we have to double that amount. Does it make sense? So what you're going to do is 2 times 620, you should have 1,240. Thank you very much, sir. Okay? 1,240. So we're debiting by 1,240. That's what we're supposed to do for trading inventory. Then they tell you cost of sales. Because remember, whenever we make a sale, we need to account for cost of sales. So then they're telling you was correctly credited. So that we can leave a note. Okay? So it's literally, we just go to our trading inventory and we put in that 1,240 on the debit side. And then you've dealt with this transaction. Yeah, can you see? There's a lot of thinking here. All right, cool. Then number 7, last one. The bank column in the cash receipts journal was undercut, less than what it should have been, by 1,800, and posted as such. Easy stuff. We know. Now, can you see here? You have to know, what is the cash receipts journal all about? It's whenever we're receiving money. So if it's always about when we're receiving money and we're saying it was undercut, it was less than what it should be, it means that we're supposed to record more money coming into the bank. Because we know whenever we receive money, it's going to increase our bank account. Okay? So what are we going to do to the bank account? Are we going to debit or credit? Huh? We're going to debit. We're going to debit, 100%. Okay, so all you needed to do there is then go to bank, and then you debit. Now that you've done that, all right, can you see? We've entered in all the necessary adjustments under recommended adjustments. Now you can calculate what should be the correct balance. Okay? You cannot do that until you finish with the adjustments. Okay? So then you say, okay, cool. For capital, in other words, question 4.1, we didn't have any adjustment. So can you see the balance stayed the same? Okay. When we go to 4.2, again, we had no adjustment, so the balance stayed the same. 4.3 stayed the same. Okay. Now let me scroll down. Okay, 4.4, there they were looking at trading inventory. We do know that we made adjustments for trading inventory. And if you've done it in here, which was my recommendation, can you see now it's easy? Because now you're just copying the amounts. So we know that the old balance was the 69,800, right? No problem. Then we know that we needed to debit 1,240, which we know is going to increase our trading inventory account. Can you see now again your dead click is being applied? Because you need to know, is the debit going to increase this account or decrease this account? If it's going to increase, we plus. If it's going to decrease, we minus. Okay? And then here we know a credit is going to reduce, so we minus that 4,400. Then we get to the new balance of 66,640. Okay, cool. We've done 4.4. Then 4.5, same principle. We know that the bank is increasing by the 1,800. So we add that 1,800 and to the old balance, and we get our answer. Can you see? You can only start to get these answers. Again, I'm just repeating this so you guys, now that we've gone through a few, you can only do this after having done all the adjustments. Because if you do it before, you might find that you have 2 adjustments for the bank, and you've already added and said, this is my answer for 4.5. So that's why you have to finish everything first and then jump into this. Okay, cool. Enough about that. Let's go on. So that's 4.5. The next one they asked was 4.6. 4.6, remember we had that VAT correction where we credited by 5,880. So there, can you see, we have now deducted the VAT control, or we added, because can you see it initially had a credit balance of 36,682. And there, that was a credit entry, so we're adding it. And now we have a new credit amount of 42,562. Okay. All right. Flip the page. Let's see what's what. Okay. Sales again. There was no adjustment there, so we just copy and paste. Advertising. We know there was that 1,000 that was not debited to the account. We debited to another. All right. So that's going to end up as 22,000. Okay, as you can see there. Then what was the next one? Discount received. That was 4.9. Okay, so then we had to remove the debit. Can you see we had a credit balance because we know it's an income account. Okay, so we removed the 3,078 rand and we added that 1,000. Okay, and that's how we add it. Sorry, here I think I actually minused it, but we were supposed to add. No, I think we did actually add. Because 3,000, just double check that amount, please, for me. I think I put a negative sign, but I think I did add it. Because when you minus 3,000 from 8,000, you should get to 5,000, somewhere around 5,000. So when you add the 100, yeah, that should be the correct answer. Just this 1,000 should be a plus instead of a minus. Yeah, okay. Just wanted to make sure that you're aware of that. Okay, then 4.10, you can see there's a debit balance because it's an expense, stationery and postage, and then we have a credit because it was overcast. Okay, so our new balance then is obviously 16,280. Okay, 4.11, the rates and taxes, we need to add in that 5,880. Oh, well, that was the adjustment, yeah. Debit balance, debit adjustment, so that's going to increase that expense. And then 4.12, nothing changed there. 4.13, we had that 3,708, sorry, 3,078. Okay, and therefore we had to add it to our previous balance. All right. All right, and that was it. Okay, so yeah, this, you need to apply your mind.
to it. Otherwise, it's over before it begins. Okay? It's over before it begins. Oh, and then there, after the adjustments, remember what we are doing here. We're doing the trial balance. Because our first trial balance was a mess. There was errors in it, or omissions. So now since we're doing corrections, if we have done things correctly, the balance that we get there on the debit side should be the balance that we get on the credit side. So here, to be honest with you, to get this answer correct, you literally just need to copy what was on the debit side. Because even if your totals and you add them all up do not equal that, you know that the answer I'm supposed to get should be equal. Your debit must equal your credit. Not so in the trial balance. So here, don't even waste your time adding up this stuff. Just copy and paste if they've given you. They could have done it vice versa. They could have said credit amount is X, and then they asked you to do the debit. So that's a quick trick for you guys in prep for your exams. Don't even waste your time. Ish. Hey, what is this thing doing? Okay, no problems. Let's scroll down. So question number 5, I don't want to do question number 5 because it's just theory and multiple choice. Okay, but you can see there in my suggested answers, I have worked on it. So you guys can use that to compare. It's on salaries and wages. So it is worth going through, okay? Let's see, how many marks did they give you guys there? 30 marks. Can you see what I was saying? 25, 20, 30 marks, that's what you usually get on that. Okay. So definitely worth. Okay, so now this is the last question that I want us to go through. Okay, and then I'm going to let you guys go. Question 6. Now this is where we're doing the profit and loss. Okay, so let's see, what do they want from us? Can you see they've given us a pre-adjustment trial balance? Okay, I'm just going to the required quickly. Under the required, it says, find the missing cross-references and amounts denoted by question 6.1 to question 6.13 in the T accounts shown below. In your answer book, next to the number, show the workings where applicable and the final answer. You need not provide the missing information denoted by a question mark. Okay. So again, same principle. We just want the things that we have. So again, guys, when you're practicing, if you haven't already gotten to that point, please make sure that you have that process. Remember those last 2 slides that I said share over the WhatsApp group. That's what I need you guys to have. All right. So remember, I told you they can't ask you everything. You can see that now. They've got the capital account, drawings account, trading account, then they have the profit and loss. And we just need to fill in. But how do you fill in when you don't know the process? No way, okay? So, let's see. They've given us the pre-adjustment trial balance. Okay. All right, so here you can just look and begin to say, okay, cool. In the capital account, we know that there's 2 things that need to happen in there. Firstly, we need to post your profit and loss gets closed off to the capital account. And secondly, we also know that drawings also gets closed off to the profit and loss. So before we can actually do the capital, can you see, we first need to do profit and loss, and we first need to do drawings, which are not complete. So my advice to you would actually be, start with the trading account, because that's the earliest stage with what you've been given. So trading account, we know that's where gross profit is calculated. All right, because again, profit and loss, we can't do the profit and loss without having done the trading account. All right, so trading account, we know we're posting sales there, and we're posting cost of sales to calculate gross profit. So sales, okay. Let's look at our trial balance, post-adjustment trial balance. What do we have for sales? What amount do we have for sales? What amount do we have for sales? We have that 1,500,000 and something thousand. But can you see we also have sales returns for 67,000, all right? So The amount that now is going to go on question 6.6 is going to be that 1,500,000 and something minus the 67,000. Okay? So I just want to scroll down to. Okay, and there you can see that's exactly what I did as well. Okay, so that's the amount that you're going to have there. Then we go to, now that we have that amount, right? Now we can calculate what 6.7 should be, because we know that's the difference between the bigger side, which should be 1 million something, and the smaller side, which is your cost of sales of 578. Okay, the difference between the two, you're probably going to get about 900 and something. Oh, so here are the exact figures. You're getting 885, okay, 1,000, okay, done. Okay, so now we know that that amount is going to get posted to the profit and loss, and you can even see profit and loss GP for gross profit. Happiness, at least we get a gross profit. Okay, then you know, can you see the trading account on your credit side? Okay, they didn't ask us to calculate that, but that 885,000 should be there. Okay, then we can go to 6.8. Okay, so this is easy because all you're doing here for 6.8 is you're looking in your post-adjustment chart balance to say what amount was for 29,382. And you know this is on the debit side, so you know your expenses are all on the debit side in the profit and loss. So let's go and look for an expense, 29,000. How much did I say? 29,000, how much? 382. So 29,382, that is your travel and accommodation. So that's your answer for 6.8. Let me scroll down a little bit. Okay, so yep, travel and accommodation. Then 6.9. Okay, same principle. Just go to your post-adjustment trial balance and you'll see that that's service income. I don't think I should really waste time going through that with you, but yeah, you just need to search the amount. Then let's quickly see. Okay, let's quickly see these others. So 6.10, we then say, okay, interest on fixed deposit. What is the amount? Go to your post-closing trial balance. Interest on fixed deposit. Same amount, 9,960. Okay, so you plug that in as your answer for 6.10. 6.11, doing the same thing, you should get 11,356. 6.12, again, you just go to your post-closing trial balance to see which amount, which account, has that amount that you have there for 11,024. All right, you should get interest expense for that. Okay, so we've done that. Then we go to 6.13. Now can you see they want you to basically balance the account, because we know that the profit and loss gets closed off to the capital account. So you check to see, okay, how much do I have on my credit side versus how much do I have on my debit side? And since this is actually an entry on the debit, you already know I clearly made a profit, because it means your expenses were less than the incomes on your credit side. Does it make sense? Happiness. You make your calculation there, and you should then arrive at this 532,000. Cool, no problem. Now you can take that amount and post it to the cap. Since you see we made a debit entry in the profit and loss, it means in the capital is going to be a credit entry. And again, that also makes sense because we know capital increases on which side? So since we made a profit, then we obviously need to credit that account, okay? So your 6.3, now we can scroll up. Okay, I'll leave it there. So your 6.3, okay, you then know this is the answer that we're looking for. All right. So the reason why I did all these calculations is because I had probably started in order. But if I had actually said, let me just follow the process, which is what we've been doing, it would probably be easier to get to these answers, right? But whatever works for you. It's, either way, you need to know your story because you are going to need to do these calculations. Right, so there we have it, and then obviously there, 6.2, there you're saying profit and loss. Okay. Then 6.1, we know we're debiting drawings there because we know drawings is reducing the capital account. Then under the drawings account, 6.5, right? Or 6.4, sorry, before we get to 6.5. There we're looking for what is the new balance for the capital account. Can you see that? So again, there you're going to say, what is the total on my credit side? What is the total on my debit side? Okay, so we know all we have on the debit side is that 4,150. Okay, so then can you see here I'm adding up what we had on the credit side, and that's how I'm arriving at the 1,300,000 and so on. Okay, so that's 6.4. 6.5, we know that's the capital account because we know drawings is closed off to capital. No problems there, and you're done. Okay. So that's why, and how many marks is that? Let's see. I don't think it was for 2 marks. 20 marks only. It wasn't for 2 marks. But yeah. So that's your 2016 paper. Guys didn't ask me too many questions. But do you have any questions, any thoughts?